My name is Rob Ellis, Pink Development and Construction, Miami, Florida. This is Miami Development YouTube. And I'm from Columbus, Ohio, where the average project size doesn't even touch this city. I moved to Miami to develop and to set record prices. And in this market, it happens all the time. So today's going to be a high level overview of some of the record breaking developments and just some high level overviews of what's going on. Um, First of all, I'm going to start with the idea of a unlimited height district. Okay. We're going to ask ChatGPT, what is an unlimited height district? Yep, there you go. No height cap, density focused, strategic locations, infrastructure. Every city has one. Okay. There are two types of development, guys. Horizontal, that means buy the land and go horizontal, or vertical. We do both. In my city, I build single family homes. I build 3-story walk-ups. We're pushing entitlements on a parking structure that's 70 feet tall, on a 4-story or 7-story, 4 to 7-story hotels, everything. I'm a licensed general contractor. I self-perform all of our entitlements, and we force municipalities to listen to their own rules and to protect property interest. So in my city, an unlimited height district in Columbus, Ohio costs $3 million to the acre. In Brickell, it's well above that. It's over $100 million at this point. And there's no possible way that construction costs 50 times more or 35 times more. It's just because people love this city and they want to put a name on a building. There's a lot of international development here, obviously. So one of the other tools is that is one of the largest differences, the cost of land. And why? Because of what is called the urban development line, Miami, Florida. Let's check it out. This is where you can't build past. Here you go. But here it's a sketch. You can't build outside of this. And because of that, we are landlocked. Water, development line, people to the north, Fort Lauderdale, and to the south, it's more water. So in reality, there is no way that land is going to go down. A lot of people, there's an old saying that says, if you're looking at it, I've already seen it. I've heard that from lots of developers here in my first year in Miami, and I've barely scratched the surface. I looked at maybe 1,000 land sites when I got here. But the urban development line, now there's no development line that holds me back in Columbus, Ohio. Columbus is in the middle of everything. So that's one of the big differences. And the last one is what's called Live Local. And this is one of the largest and best tools for developer in today's. I did my first video on it in Miami. And what we're going to talk about is Live Local. Is there anything like it in any state in America? Live Local Act. Is there any other state with this bypass available to developers? Are these all at the state level? Okay, so there you go. Now, nobody from my connection, California lands too much, no developer wants to enter it. Connecticut, same thing. Massachusetts, same thing. New Jersey. You see these enacted where the cost of land is so great that it's almost impossible for people to live affordably. where housing is so great, where the biggest needs are. And Miami started this. The attorney that helped write it is right here in Miami, who advised on it. And the developers that are taking advantage of this are right here in this city. So in this YouTube channel and in my developments, I call it forcing density as on municipalities. Would you consider this forcing densities on municipalities? Yes. In a way, you are forcing density. These are overrides. Okay. You can't do anything about it. And this is what we're talking about. These are extremely controversial. They do force density, but you have to work with them. And they do introduce additional housing stock to the market. Now, I've seen all sorts of BS legislation, even down here in Florida, that limits the sizes of units and all sorts of stuff. And you can challenge all of it. But the thing is, there's so many tiny little cities that a state bill is what you need to get rid of all of them. And in my first video on this channel, I looked at Pinecrest as an example of a $4 million site, how you could take a density from 1 housing unit per acre to 50. And I could be wrong. That's why you talk to attorneys. It's only my opinion. But I've been doing this for 2+ years. I'm working on 15 projects at a time. And this is the best state to develop in. And this is the best city in America. I meet people from all over. People visit it from all over. You've got everything you could ever want. I've traveled and been. I've talked to land entitlement groups. I do raw land entitlement, which means I'm talking to people that are putting in hundreds of units of acres around the country. I can't talk to all of them. Okay. But even Leonard, one of the largest builders in America, over 4 to 5% of their housing stock comes in this market. They're not even in Columbus. D.R. Horton just entered my market. You see the Carolinas, Texas, and Florida as the main markets that people are looking at probably, and that those can be boiled down to tier 1 cities, right? But anyways, we're talking about Florida. Who cares about all the rest of it? I'm just doing some high-level overviews of what it's going to take. What is the largest loan ever for banks for developments in the country? Let's see here. Here you go, guys. You are setting records. Our city is setting records every year. New York City. This is New York 2.0. Tampa's Miami 2.0. Everybody's moving here, and you're going to see Miami currently is the 3rd highest skyline in the country after Chicago and New York, and net migration is in our favor here. So I moved here to be building the tallest buildings, to set records, to name buildings after billionaires, to do things that are literally impossible in my city. And you're going to see that. This is Waldorf is not PMG. That's who secured it, but who is developing Waldorf Astoria? It's S2, I'm pretty sure. S2, baby! I wasn't wrong. I had one of their development sites in contract from a guy that committed wire fraud. And so look how many different people are involved in these. This is a New York Capital Group. All these other guys are just get on the bandwagon. You know, Hilton isn't doing anything. They're not bringing the money. These guys might have brought the land. Who owns the land? Who closed on the land? PMG. There you go. 80 million for a 2-acre site, which is cheap. Cheap. Remember, guys, $100 million in Brickell. They found the loophole, a 1,000-foot building. I have no idea, but the heights are going higher and higher, but because of the proximity to the airport, I haven't done 1,000 high-rise developments, and I definitely don't know the perfect amount on this. But when it comes to this stuff, there's nobody that's going to know it better than the people doing it. You got to be at the zoning meetings, challenging these guys, asking questions, and saying, prove it. And they bought that 10 years ago. 10. Let's look where it's at. 300 Biscayne. Guys, remember where this is. It's in an unlimited height district. How crazy. We just talked about that. So all these other guys, there's height limits in every other place except downtown districts, which is where if you're trying to make bank, if you want to do the biggest developments that have ever been done, you better be in Miami and you better be in the unlimited height districts. That is a for sure. There's nothing taller. There's two unlimited height districts in Miami, Brickell and downtown. Let's see here. 33 Brickell zip code. Now in my city, there's only one zip code. Miami's much bigger. So there's 3 in Brickell, and I think downtown Miami zip code. Oh gosh, they're trapping us. You see 33130, and there's 33131 right here. So, and there's probably a little bit more up here too. So again, you can take the gross square mileage of what that covers, and it's probably larger than where I'm from, obviously, in Columbus. Columbus has one of the highest rates of parking lots in the whole country. And because of that, this city definitely doesn't. So when it comes to this stuff in vertical development, there's not a lot of players, guys. There's like even S2. You can either fight an urban adjacent neighborhoods or you can just go for the meat and potatoes and start going to the zoning meetings in downtown districts. If you guys want to learn about this stuff, you have to be going to zoning meetings. You have to be understanding it, okay? Now, how would you close on a site like this? You got to get with these guys. They got to bring the funding. You start going to the meetings. You say why you think they're right or wrong. I can have a different opinion than someone else. And if I'm right, I'm going to win the money. Because if there's a way that they could have done it more efficiently, their architect's going to lose their job. The development team's going to lose their job. Their construction firm's going to lose their job. I've got experience in national construction for 5 years. I looked at 15,000 projects and bid more than 5,000, won more than 100 to 200 contracts. And I love proving people wrong. I'm 32 and I got 40 years or more left, hopefully longer, of development. That's a lot of skyscrapers. And so because of that, you just want to start working in the unlimited height districts and start getting to know the players, guys. When it comes to how would you close on one of these? Well, let's look up who these guys are. Property Markets Group. How well are they capitalized? And what's their assets under management? $11 billion. Now, a project like Waldorf Astoria will be more than $1 billion. It'll be more than 1 million square feet. Let's see how many square feet it is. How many square feet is Waldorf Astoria? It'll probably be 2 million square feet. 1.6 million, which is as big as the Aston Martin. Look at this, 1,300 square feet. Wow, how great. And then they have a parking structure with 600 spaces. So this is going to be as large as 1/10 of their projects, which is a big risk. I wouldn't even say this group is really, they're large. How does it shape up to other REITs for assets under management? Are they in the top 50 nationally? You see that? They're very low. So I would love to read their background, and they've only made it that far. They're just doing their first billion-dollar project after 30 years in business. That's crazy. Prologis is a publicly traded. You can't be private and ever be the biggest. I sell to public companies. I did projects nationally for public companies. I worked on redevelopments for the fastest expanding publicly traded firms in the country. Everybody, Family Dollar, Target, all sorts. I think Chick-fil-A, let's see if they're private. I think Chick-fil-A is private. Okay, there we go. 70 years. So, but mostly you can't sell to private. Prologis is the largest holder. Prologis' largest tenant, I think, is Amazon. Let's see. There you go. 5%. Guys, I know everything there is to know about real estate. I've been studying it. I was in national construction and I watched what was driving national development for 5 years. There's tens of millions of square feet. That's not that much. Again, depending on your average project size. Guys, I'm developing buildings that are 250,000 square feet in just Columbus, Ohio. I can definitely work on projects that are 1.6 million. You know, this is going to be one of the largest buildings ever built in Miami. Square feet of Hard Rock Casino. This is one of the largest. Let's see how big this is. I think this is over the 2 million. Total development square feet. I think it's over 1 million. 2 million. There you go. This is one of the South Florida's largest developments ever, and you can't really get much bigger than this. In my city, there's not that many that are 2 million square feet, but even we've talked to developers that aren't afraid to do 750,000 square foot buildings, which would be a 20-story building with a footprint of at least 30,000 square feet, right? That's 600,000. And a lot of that has to be parking too. So if you get an acre in an unlimited height district, you're going to be set for life. And there's not that many people. How many cities have a metro population over 2 million? Yeah. So here you go. These are metro populations. This is like, and we're going to be somewhere. Let's check in here. We're bigger than Pittsburgh. Oh, there you go. Columbus. So I'm in this city. So these are all the different places you can do it in, but at some point it's not that much different. Most people are in some of these markets. I would never touch Cleveland, but Columbus is in there and it's probably one of the fastest growing cities in the Midwest and it has larger development pipeline than Miami does. And it's really a lot wider, way ahead in terms of tech, and fashion. Well, not fashion, I would say. I shouldn't compare my Columbus to Miami. It doesn't really compare on a lot of things, but most people, these are tier one cities. Um, how would you break these up into tier one and two? Okay, so tier one, these are, you see Dallas, obviously. These are tier one cities. Um, what's the count on both and by state? Where are the most? tier one cities, California, which nobody's going to, Texas. I know a fund over there that does horizontal entitlements. Florida's got two. New York. That's why I moved to Florida for my job to make lots of money in development. None in Ohio. I would hardly say Detroit's a tier one. That is insane to say that Detroit is tier one. Nobody, I guess maybe though. It's got so much housing stock. Here you go. And here's why, guys. Look at this. California, Texas, Florida, number 4. And we're the best city in Ohio. So I'm in one of the top cities in one of the top 4 states of a tier 1, tier 2 market. You know, you see this. Pennsylvania's got some too, but that makes me a little bit qualified. Having a general contracting license, states with the most metro areas, California, Texas, Florida, and then Ohio. Now, everybody's focusing on the Carolinas and Atlanta and all these other places, but when you actually look at the demographics, Georgia, Texas, and Florida used to account for 1 in 3 nationwide development projects that I was bidding. Over 35%. It was like 36 or 38%. None in Ohio. Columbus, Ohio is super underbuilt. Years and years and years behind. Nobody's been developing there, which gives us, we are cleaning up in Columbus, Ohio. You build your base and you grow there, but tier 2 cities, despite lacking major tier 1 metros, coastal and southern states, which is why people say the Sun Belt. And so I think that's a good economic driver. So, what does an acre of land go for in an unlimited height district in Columbus, Ohio, and Miami, Florida? Let's see how well it can pull this. It's definitely not 1 million per acre. There you go, 100 million acre. So if you ran a super quick financial model, which would be better to buy an acre? You see, this is why, and this is a quick one. These numbers are way off, but it's lower risk. That's right. The Midwest is very stable. It goes like this. Miami's up and down. Assuming land is 100 million per acre, how does that change the model? Which it is, guys. So if you want to get into development, only 100 million in Miami per acre. And in Columbus, it's closer to 4 million per acre. We'll go on the high side. I think Miami's a little low, and I think Ohio's a little bit high, Columbus, Ohio, but we'll stick with it. You see, even at $100 million, we can say exit price of condos in Miami would be 600 per square foot, and Miami would be 2,000 per square foot. Let's see. These are the rough assumptions when you're looking at capital markets. You see what I'm saying? You can make again, you're probably strong returns with lower capital risk. So you have to be very well capitalized. To compare these two cities, you have to compare apples to apples. We're comparing unlimited height districts and how hard would a 1 acre raise be for each city on a scale from 1 to 10 for an experienced capital raiser with no funds invested in the deal. Let's see how they would rate it. Difficulty, you see that? So if you're looking for an easy single, it's Columbus, Ohio. Land acquisition, higher risk perception, and also that it's a very up and down market. Very hard raise. You'll need investor trust, a powerful pitch deck, and proven experience with luxury development. That's why there's only a couple. And pre-sale commitments, celebrity partnerships, luxury lifestyle marketing, and that's all the stuff that you see, right? Now, one of the things that we've looked at is taking Miami's buildings and putting them in Columbus, but when you have both cities, Columbus and Miami, and they're almost opposites. One's at the way bottom of the list, one's in the top 3 luxury markets. They're crazy different. You saw the list of cities. And because of that, it gives me really good insights. I feel like I'm 20 years ahead in Miami of where Columbus should be at. I tried to put a 10-story building next to houses like they do in Wynwood, and we got destroyed. It's coming. I'm taking Ohio's home rule to the Supreme Court if I can to challenge it. We're forcing it. I would love to get the same bill. And if I made $500,000, I would get the best attorney and take it to the Supreme Court and sue everybody. But because we can't, that's why I moved here, because this state just came out with one of the most aggressive and one-sided things for developers to bypass and go substantially higher. And now land that you could never buy is all of a sudden amazing. If you don't know how to do that, then stick to the unlimited height districts, But we want to do large developments like this, and the easiest way to do it, to get those numbers, the premiums are so good. And downtown Columbus, it's where we're focused. Downtown adjacent. And in this city, because I live local, you can go way further out. There's not that much land. But from my perspective, almost nobody wants to try to compete in this market unless you're here. So we focus on Miami, Florida, and Columbus. But this channel is about Miami. And this overview was about the high-level looks at real estate development and the differences from a Midwest town, Baroque boy from Ohio, from Toledo, Ohio, a little Rust Belt city with negative population growth, right? Toledo population growth. It's going to be negative, probably negative 3%. Let's check. Percent per year decrease, 7%. I was off by 2%, but there you go. Okay, this is where I'm from, and outside of Columbus's 2 counties, Ohio would have negative population growth, guys. Delaware County, Franklin County, and really we're compact. I'm in 4 zip codes in Columbus. It's the same here, 4 to 5 zips. You're gonna find the areas that you like. You're gonna find the development teams that you like, and go deep. That's it. Hope you guys learned something.